Today we're going to focus on something a little different. Instead of doing live trades like we've been doing, we're going to focus on what to do in a scenario like this, which I think is much needed right now. So really what we want to do is look for time frame development right now. That's the first step. We have a daily level that got hit, daily break. Wait break from back here. So you've got your daily break gets hit, and then you now need to start looking for time frames to develop thereafter. So we're not using anything from the weekly, so we're not looking for daily levels because this is just a daily break. So far, we haven't marked as a weekly, but we're going to change that to daily break. Been hit, it can go. I believe this was as well. Backside. So yeah, you're going to have just time frames that you need to develop right now. So 4 hour being the first one. Obviously, that's right here. So you've already got that. So you're starting to develop what you need to break this down, right? Like rejecting a 4 hour would have been your first step here in taking this. That's all you have. You have to just start building time frame down from daily, and we don't need us. Actually, we'll leave that trend, but we're going to delete some. We're going to go take a look at what these are. That was weekly hold. We don't need that. Break. If we stay above this weekly break for a few weeks, that's fine. It's relevant still, but right now it's just not really important because you're going to have to sit here for 2 weeks between these two ranges. And that's just going to be something that's a little too tough to accomplish right now. So yeah, we're just simply going to start with finding our time frames, working down from the daily, which is right here. You've got your 4 hour. You've had, oh my God, 4% off this thing. Wow. That's quite a big move, actually. Hour of trading, 4%. Geez. So now we're just going to continue to trail this down, right? We're just going to continue to trail this down. Go to the next 4 hour here. We're also going to start looking for 1 hour information that's holding us down. This is the 4 hour here. You've got a 4 hour that's hit as a reverse. Now you've got kind of like this more of a blunt 4 hour. And then we also want to look for 1 hour time. So the 1 hour time frame, I don't think is really going to be much of a difference here. Like you could have exactly what you're seeing, which is at first got a 4 hour. Let's go to 5 minutes. At first, you've got a 4 hour that's hit and pushed through, right? Like you've got this hit and pushed through, and now you're holding on the 1 hour. So I think that's really the key here, is that this 1 hour is holding. And yeah, I wouldn't look too much. I wouldn't look too much more past that. Like I would start marking my 4 hour levels down a bit now, as well as my 1 hour levels. So I'm going to use these in conjunction to see exactly what the correct move here is. And what I would want to do is I'd want to gain this hourly, obviously, continue that trail. You've reversed this hourly here. Go after this one next, and even possibly this one. So I want to mark this reverse. I want to mark this 15-minute reverse as well, just so I can see if this is actually going to go under it or what's going to happen with it. You got 4 hour, 1 hour, 15 to gain this next 4, this next one, and I'd really be looking for a short right now in this move. Really, I've got this hourly here. The hourly hits there, so really you want to stay below this. That's where that hourly hits. You've got a 15 reverse here and a 15 and an hourly here. So obviously the first step is gaining this, also gaining this. So it does look like a good spot to try to find shorts. It looks like it kind of already happened on the 5 minute here, but again, just working time frame down to find the right entry. This I think is your short right here. I don't think I would go as far as to see the body hit. I would just go for the wick, because also you're gaining that other level right there as well. You really don't want to start getting above 15 hold levels here. You've got a 15 minute here, which is also the 5 minute. So you really want to just kind of reject that there. So I think the first thing I would do is try to short this and use this as my trigger. Like it's a pretty small trade, pretty light. You can reduce a bit of risk by, yeah, I mean, you can't even really combo. I think I would just go right here. I think I would just take this here as a short. Can't combo that. There's a 1 minute here. You could try to get a little greedier and go for this 1 minute. Yeah, this is the trade right here. This is the short. Let's just see how this plays out over the next few minutes. Get a little greedier. So this does go for the 1 minute, but RA wise, like, is it even worth it to take that 8%? just let this trade mature a little bit here. The 8% is not worth it. If you're not in the trade already, you wait for this, right? Like you're not already in, you're waiting for this here, but you're going to hit that there. So I myself didn't have time to take the trade because I'm teaching obviously right now, but that's where I would have taken my trade. So hopefully some people got in it, but if not, that's okay too. Also learning right now. So this is really what I'd be looking at, building this architecture down and seeing if this trade can actually break down. The move was big enough, the bottom side of the chart, to start to think that this will break down. We do want to also find, you're not going to have any daily trends. We don't, regardless of it, even if this was white or not, it's not enough. We're just going to be looking at this 4 hour as well to see if this can hold the move down. And so like you've got a pretty basic and easy trade here. You've just really taken your time frames, you've moved them down, you found the reverses, you know you have to gain this down here, and it starts with the hourly. So if this stops you, you get out of the trade. Your trade really exists from here to here, 52%. If this holds, you simply get out, but you really do want to lose this hourly here. That's kind of the motive of the trade, and that's going to bring it down. So just see how this plays out a little bit here. So far so good. Entered on the 5. It's pulling back right now. That's not like it moved up much, you know, RA wise 10%, that's fine. Anything else holding you down? Anything else holding you here? Yeah, I suppose if you start to hold something like this, any of this stuff here, if you start to hold it, it's not great, but I also wouldn't let it stop my trade. Yeah, that stuff holding is not a concern to me. The other play you can do is you can short the trend, obviously, because that trend, if it continues to hold, like that's going to be your kind of last line of defense, right? Like that's your 4 hour that'll cycle the move, and you've already tested this 4. Maybe you can reverse the 4 again. You might be able to get a snake on the reverse, but it is definitely going to be tougher to get up to that reverse. I think the trend there has to hold, and really you just want to hold this move. You just want to see stuff like this not start to hold on the bottom side here. So again, we just wait. Assumingly we're in the trade, we just simply wait now and see this thing start to break down. Start double checking time frames here. Again, daily, 4 hour, next 4 hours right here. So got that there. That 4 hour there, we can just here. You've got trend, so you've got all your 4 hours covered. If you are going to start reversing this move, you do have your hourly here, which tested, got your 4 here, your hourly there, your hourly is tested, just brings you right back to the 15. This 15 is also an hourly, so oh, actually no, it's not. I marked that as a 15. I forgot to. That also, no, I for some reason didn't change. So let's do that real quick. This will be your hourly. This will be your 15. And these are just really the targets you need to start gaining. You got a reverse 15 here. 1 minute holding it up. So that is going to hold it up. If you haven't gotten your trade yet, the next spot you get in your trade is this one here. So we can take this off now because we're already kind of testing that. We just wanted to see if we under it, but now we've got different little hold level here. So the next entry on this is this or the 5 minute. You can even enter this. Like I don't think I would enter the 5 minute. It's just not straight over. Really, you should be in from the 5, but that's fine. This is 2% away. It's not a big deal. So if you haven't gotten in yet, get in here. Yeah, now we just kind of wait and see how this plays out. Hopefully this pulls it back and you just lose your move here. Because this is going to start to be, well, end the trade. I'm also going to look to take a trade. Or if this breaks and I have to get out of the trade, like it's a good amount away that you can, you know, get out and take that on the 4 as well. And then really what you're not wanting to see here is you see you can hit this 5. It's 14% away from the 1 minute level, 21%, 21, 22% current trade. But let's see what happens here. You got 8 seconds and you've got a new 5 minute, which is critical, right? Like that's real. Oh, you really didn't. Too bad. That's really too bad. I would be a little more cautious now with this trade. I would be looking to get out if we start to get over top of it. You got to be very, very careful with this trade right now. So 5-minute entry, which here you've got to be very careful because this turns blue. You've got to like start thinking about getting out of the trade, right? If that was a white candle, this is the opposite, but it's not. It's a blue candle. It's just going to create a hold level. You're just going to hold up the trade, and then yeah, as you can see, you're already starting to move up. So yeah, you pretty much want to get out of the, you want to hit this 5-minute, you want to kind of get out of the trade down here, because that's, you know, you're just really looking to go after this 4 hour now. Things, they can just change so quickly on the charts. Like, see what happens. Where's that 5-minute? Right here. I don't think I would limit exit. I think if this holds, then I'm just market exiting. I think that's the way I'm doing this trade. I don't think I'd limit exit yet because you still are hitting a 5-minute. It still is pulling the trade down. If you want to reduce risk and limit exit on your 5-minute, that's fine. You can do that. But in my case, I wouldn't do that. I would wait to see if it's actually going to hold this. So allow it to have like a 1-minute candle. Hit this right here. Allow it to have that. And then if it holds this, then you just get out of the trade. But I definitely wouldn't be limit exiting there in case it does move down. Yeah. So like if right now, if this trade is, you know, you really want to gauge it with this. If you close under this, stay in the trade. If not, get out. That's really where I would be with this trade. Close under it, stay. Go above it, get out, and just take out your zero losses here, or very close to, because this is kind of where you entered the trade right here. So as long as we close under it, I'm good. I'm good to stay in. And then you've already tested it once now. So starting to get back over top of this, that's another spot where I just exit the trade. You're in a good spot right now. You've entered here or here, anywhere. It doesn't matter, but you've got like pretty great protection on this trade. There's really no way to lose on this trade. So just start getting above this and you just get out of the trade. Yeah, I would just set a limit order here now. Set a limit order, get out of the trade, and try that 4 hour trend. And again, I might change my plan again based on not reaching this. Like if we reject this, I'm not limit exiting. Gonna give it a minute to kind of mature here. And you can see you're just constantly adapting to see what time frames are doing what for you here, right? If we hit this 5-minute again and reject it, I'm definitely staying in the trade, because that's just, you know, the same level hitting and holding over and over and over and over, right? Like you're still within that first touch of that, within, you know, your first 5-minute candle here. So yeah, it's interesting how much the charts adapt as you're taking these trades, and you know what exactly is happening with them. And you've also got this here now too, so you've got to be careful of that, right? You're really looking to build this here in 20 seconds and then go below it. Hold this and get out. Reject this and get out. Continue to move down. Stay in. Very straightforward.
Hitting a 3-minute origin now as well. That's another 5-minute.
You definitely want to get below this, and you definitely want to get below this. You just want to get clear of all hold levels here. You hold this, market exit. You got 27 seconds to get kind of below all this stuff. That's where I want to be, below all this stuff in 27 seconds. And as a minimum, you definitely have to be below this 5-minute hold level. If you open above it, you got to get out. Even the 1-minute candle, if it opens above it, I would be getting out. Negative 20%. I think I limit exit here on the 5, slightly above it. Yeah, I would limit exit here. Just take my small loss, and then it's like 1 or 2%. It's nothing. And then you just get out of the trade. You are holding this 1 minute, so you could market exit this as well, but I think I would wait for the limit. And then if I get above this, I'm just market exiting. That's fine. You just take a little bit of an extra loss here, but I would definitely be getting out in and around here. Just a couple percent. Just nice, easy, safe trade. Yeah, a couple percent. The last thing you want to do is start making a hold level here and then getting above that, and then it's just going to break up. It's pretty damning if you do that. Writings on the wall kind of thing. So closing a white candle here is great. That's fantastic. That's absolutely fantastic. Because now you just have a new hold level that you can gain, and you've got more protection in the trade. And then, of course, if you stay above this, you just also get out. So it's like really a lot of control in this trade. Where is this hourly marked from? I think that was something we were using before. So now you've got a 5 here. It's not there yet, but it is a break level right now. There's that 4 hour. Another trade on the trend. Go for that if we just start moving up. But yeah, really the most important thing in a moment like this is just that time frame control, right? Like just understanding what the trade is capable of with that time frame control.
Would you get out the trade now if you was in it?
No, it's not worth it. You just let it. Like, how much are you down? If you're in the trade, you're down 37%. You're gonna limit exit almost at the spot where your stop would just trigger anyways. You're better off trying to get out break even. You're always taking these negative 40s. You're better off letting it run for another 10 or 15%. Risk 10 or 15% to make 40 back. It's not worth exiting for 40%. When 10% more is 4-to-1 ratio, it's not worth it. At this point, if you've made a mistake, you're just trying to get break even. And then if not, you just let your stop hit. Like you're risking 10 more percent. Say like you're losing 40 or you're losing 50 something, like 10 or 15%. It's not worth it. Not when the recovery, unless you're like 100% sure it's going up, but you know, could still reject any of this stuff here. Like you're still closing under time frame. So yeah, absolutely not. I wouldn't. Like you've got this here, and then like if you've got in on that 5 minute, you're still covered to here, right? Like it's just yeah. Like imagine market exiting and you market exit 46%, right? And like 12% more is liquidation. So your liquidation is going to be, well, it's not liquidation. I say that, but it's like your stop loss gets triggered, right? Your stop loss gets triggered. Where does it get triggered? Like here.
58%.
Stop loss gets triggered there, right? So like if you were to market exit right now, even right now, because you just think it's ripping up, you're exiting it at 48%. So you're losing 48% to save 10. It doesn't make sense. Or you should have exited down here when something was holding the move. That's your other way you could do this is that you could go for something like rejection as a hold on the move. So what do you have? 5, 15. You don't have a 15. Like you could get break even rejection as a hold here. You could also go for this 5 minute level right here. So we're going to stop this. Like you're better off at this point trying to get out here, or even just break even. If you've already market exited, like you could have market exited down here for 30. So like that's where you have to kind of gauge your trades, right? And then get below this. Well, you definitely want to get below this as well. Where would be another spot tag? Yeah, the 5 minute is good. And then if you can exit on this 5 minute, even if you get out on that 5, you're only down 16, 17, 18%. So it's like 2 positions instead of 4 to 5. And then again, you're only risking 1 position to get that. So it's just trade control with risk is an interesting subject because there's a lot of things you can do to mitigate risk. And then if you end up hitting your stop loss, which should be close to liquidation, how much have you actually lost in the trade by being this wrong? It's not like you're liquidating a full position. It's pretty controlled. And then I find it's all of the small 20 and 30% trades where people are so concerned about liquidation. I find it's those trades that kill people's bank account because they're constantly getting out of trades, constantly getting in trades and getting out as soon as something goes bad. Like we already have to worry about liquidation being around 60%. right? So if we already have that to worry about, cut that in half at 30%, and people are exiting these trades constantly at 30%. Like, Jesus, talk about bleeding money. Like, I would rather liquidate an entire position than, and I keep saying liquidation, but it's not liquidation. I would rather stop loss an entire position than constantly take 30%, 30%, 30%, 30%, 30%. It's not worth it. You're just going to end up bleeding out your account. You're better off here and then taking another trade here. And then what is that like? And if you're so concerned about it, it's not like you've got to here to recover it back. Like, it's not a crazy amount, you know? So I find that's what kills accounts, is being wrong and hitting your stop loss. It should happen very infrequently. Like, I think I haven't hit a stop loss in probably the past 100 to 200 trades, or maybe every 100 trades I do. Like, it's very rare that people in mentorship will see a stop loss get triggered for me. And right now, if we hit this orange line, that'd be the first time in months. So, and how many times am I getting out of trades break even or just in great profits, right? Like, it doesn't take much to offset one of these trades.
Mm-hmm.
I just don't think it's worth it, right? So like, we're going to assume that stop loss triggers here. So see if it gets hit. Simple as that. I'm still not panicking. If it gets hit, it gets hit.
You are the OG.
Oh, look at that. Well, maybe it'll dump now.
It's happened to me so many times.
You could even exit right here if you wanted. Limit exit here if you're so concerned about it, and save yourself the 20%. But again, you're just back in that scenario where you're better off trying to get out break even.
Do you have the 15-minute break as the entry on the trend?
No, I have the trend as the entry.
Okay.
I'm only looking to enter trend right now, just 4-hour levels and nothing else.
Yeah.
I only want them to hold. I don't want to start pushing up past levels. I don't want anything like that. Yeah, like if you were so concerned, you could have limit exited right there. Bang, you just limited exited. And look how much you saved instead of panicking. Because again, now what have you lost? 30%? I still think that's a bleed out. I don't find it's worth it. If I really wanted to exit, I would exit on rejection as target right here. So if I really wanted to exit, I would exit right there and be 17%. If I was really that worried about my bankroll, I'd go 17, 18% rejection as target right there. Otherwise, I'm getting out like, yeah, I'd probably get out there. I think that's a decent spot. I'd probably get out there. Because like going down, you're not going to go down much lower before you hit before your hold could possibly hold you. So you're only saving 7%. Yeah, that's worth it. 7 or 8%. I just exit right here. Like right here kind of thing. I'd exit right there. Limit order it. Exit it. Yeah, because you could go right here and you're only getting 8% more and you're getting break even here. Yeah, it's not worth it. Just exit there. The other thing I would do maybe is if you start getting above this, you could take an exit above it and save 20% because it's clearly starting to hold. But I think I would still just hold strong for this. It's laddering off this. That's not good. That's going to probably move up now. You just held that little thing laddered, going to make a 1-minute hold level. Hopefully that rejects so we can still stay for our target. That one didn't. Hopefully this one does. You got 20 seconds. You need to start moving down. You can't close above this. If you close above that, I would limit exit somewhere. I'd start sliding a limit exit close to it. 30%. Ugh, I hate that. I hate taking trades at a loss. I'd rather hold for... You really don't want to hard close above this. That's for damn sure. I mean, if you hard close above that, you're probably hitting your stop. Like that's just the reality here. But you do still want to see if you can get below this. I think you can even limit losses even further now. Where's this in relation to everything here? Yeah, I think you get out right there. I think you exit. You're now exiting like right here, 12%. Like something like this, right there. 12%. I'd have my limit order set. Or you're just going to trigger your liquidation, which is fine. There's no point in getting out of it anyways right now. Again, I keep saying liquidation, stop loss. I gotta stop saying that. My brain is fried. It can't, like it's not telling me the difference for some reason. That's good. That's good. That's what you want to see in this trade. You do want to see that. Have this right here and then get below this pretty easily. And then you've got another hold. You've got more room to move. So you're going to move down again. You're probably going to get down to this area here again.
You developed a 3-minute. So yeah, makes sense.
You're just looking for some kind of 1 minute levels to hold and give you some kind of protection against this. Like you start getting above these rejections as target, like these 1 minute hold levels. And then obviously you're going to move up and it has to create a move down now, right? Like it has to create that move down. You hold this 5 minute again, I think you're just dead in the water. You hold this one more time. Hit that and hold it, I'd probably just exit the trade. If it holds. Get below this, you're good. It's the backside. Well, really you want to be. You can measure your exit now. I'm gonna go right here, limit there. Yeah, and then I'll be out of the trade right there. Yep, that's it. So yeah, because I think this is gonna hold up now. So 18% loss, not bad. Not bad. Not bad for a trade that you got to see it play out that long. So you see how like I like if this like holds, it's just not worth getting in. Like that's where my exit is. So that's like fine, move down if you want, but at this point, you know, you're with this 5 minute here. You're starting to hit rejection as a target here. That's that 5 minutes still. It's not getting below it. You still got this. You can reverse. Now I would just go for something on the 4. Now I would take the time to look to see if there's something. So that was like a really good example of like managing your trade expectations, because panicking out at like 30% is the worst thing you can do. You're on like 30, 40%. Like you start seeing something go up, have stop losses at 30%. It's fucking terrible. It's such a bad thing to do, because if we're already, like I said before, if it was a true 1-to-1 liquidation ratio, then you can start looking at these percentages differently. Because we have to fight with 60% or 50, anywhere from 58 to 70%. I always just say 60% is a nice round number. If you have to start fighting with 60% liquidation ratios and you're starting to get out at half of that, like you are playing against the odds like crazy, because people are not taking 30% profits equal to 30% losses. People want to make 1%, 2%, 80%, you know, like a full 2% or like a 0.8 or a 0.7. You know, that's like a good spot to have it. Oh, this thing actually started to move down a bit. We're back where our exit was. So from here, we're back right here. So we might have actually been able to hold for a little more here. I don't know if it's really worth it, to be honest. Like with you know, you've got this rejection as a target held. You might not have gotten back. You might have just flew right up. And still, even right now, you might just start flying up and, you know, hitting this hold level and holding that. So like now you might just go right over top of it, or you might move down to break even. But again, you can't be exiting 30%. Like you've got to give these trades room to run. And if your trigger gets hit, like liquidation gets hit, or so if your stop loss gets hit, then fine, you lose half of a trade. It's, you know, to make half of a trade up on the other side, 50% is very simple. That's already the trade right there. It can be made in like less than 5 minutes, and you took a stab on a good level that had architecture that went from daily to 4 with another 4 to a 1 to a 15 to a 5, and there was nothing left. And now you're starting to break over that architecture that you're hoping holds the whole trade down. So now you're back to another legacy level, which is your 4 hours. So now what I'm going to do is I'm going to just take a break for a second, and I'm going to start looking at where the next 4 hour level could be, which is right here. Got it right. I'm just going to make sure there's nothing else back here. No, there's not. I don't know why there would be. So now, really now what I want to do is this trend. It's fine. That trend is fine. I really want to look for this as my entry. I don't even think that this 4 hour level is worth taking at this point. The only way that you could take this 4 is on the reverse 1. So I might try to deep dive this as rejection to target with this as the 1. This is my trade. So this is my next trade right here. This 1 hour.
The first one, interesting.
No, I would go here for my next 1 hour trade. So you can see how, like, yes, we got close to liquidation here. We marked it. It wouldn't have actually been here. It would have technically been a little higher. But anyways, now you would have hit it. But you can, like, I marked it here as like 50 something percent. My next short will be here. The only problem I don't like about that.
It's been hit quite nicely.
Yeah, it like,
2 hours
if
ago.
you were to take this, let's just start measuring. If you were to take this, If it's less than 20, I'll take it. Ah, it's right there. It's really an uncomfortable spot. And then you've got this as the backup. That 1 minute there is the backup. So maybe you actually just go for this instead, because this can turn into a 4, deep dives it a little bit. You go for this. I don't think you're going for this 1 minute. I think it's between these two targets. Or even this rejectionist target as a backside, but I think this is a little more advanced, something that I wouldn't want to have people take this trade. I think you can diminish a little bit of, let's measure it again, for a 1 minute level, 20%, 28%. It's not worth it. I think I would just take this right here. I think I would just take this. What did this create? That's something else I want to know. So what I'm going to do with this is I'm going to just move it here because I want to see what this created to understand if it makes sense to take that. What did this test and what did it create? Right, you've got a 15 there. It didn't test anything. If it had tested this, I would be more inclined to take that, but it didn't test anything actually. So I think I'm okay to take that. Let's also see what this is here and this as well. So let's mark this one, start here. Not going to be anything bigger than a 4. Is it a 15? Can it be a 1 hour? It can be a 1 hour. So this is also another spot that I like. You've got the 1 hour, you've got the 15. That can't really deep dive higher because then you're back up to here. This ladders this right here, which is that 1 hour hold level. Let's have this thing marked properly here. And you've got that up there as your 4 hour. So we need to mark this properly as well. So that's your 4 hour up there, final target. So if you are going to cycle this move, it's going to be off that there to there. You can't create a daily. So the best you can create is a 4. So you got a 4 hour. Got a 4 hour here as a reverse target on the 4 daily. Create your 4 hour trend by hitting your first real 4 hour level. I think that's where your big trade is. I think this is a good spot. 68,396 is the spot. I think that's pretty clear. This stuff in here. Now, with that said, being that that's my primary target, what I want to do is I want to see, like, just take the greediest level here and nothing else. Nothing else. You have a 15. That's the hourly. You have no hourlies in here, do you? No, you have no hourly break levels. You have an hourly hold here. You have an hourly hold here. This is already being tested. So that goes past it. This reverses it. This goes past the origin. This is your neck. I would only take this. I would only take this. I wouldn't take anything. You can deep dive it to this. That's the best. I don't even know if it's what back here got. You've got this one. Through. This hasn't hit origin. You're not expecting that because by that time, backside this, you'll get above that, hit this origin, reverse it, hold this level. You want to enter. Not interested. Yeah, this is a little bit of a tougher trade actually, because there's a lot of, like, really, this is the ultimate target. However, you still want to say you can create a 4 hour trend, which is a level, by hitting this. So you want to go for the greediest target and then measure against the two. Oopsies. Here to here. So that's, I really think this is like, you just go like a little bit under, like you're just going at 35 here. You're just going a little bit under this level in case it doesn't hit because the spread there is not big enough. That protects the move. Hitting this breaks the ladder. You could also do something a little trickier. Look for a reverse in here, go above that. I don't love it, but it is something you can do. This isn't hit, is it? No, which means you were to go here, about 43%. Oh boy. That's really tough. So can you make a new origin here? At that point, you're not using that. You can make a 15 right here, actually. So I think maybe that's going to be, I'm going to leave this here, but that would be my target. I would deep dive this and go to this 5 here. If it's less than 25%, that's my play. I think I start going around this 25% mark. I go right here below whatever this little origin is right here to ladder that part of the move to create a low time frame range trend. Because I want to say this can create a low time frame range trend. Let's see if there's something there that's worth. Range trend right here. Hit that level. Backside, range trend. That's your level. That's where I'm going. 67.9. No questions asked. It does everything I want it to. It hits 5-minute untested there. Yep. It creates. A second, let me double check that. I need to take this replayer tool off. It's driving me crazy. Okay, let's go back to this. That's back to that. Three-minute hold. Range trend from here. Get above that. That's a reasonable amount. That's where I'm about looking for, 20-ish%. I think I would put my trade like, yeah, on the whole double, 67.9. I front run it a bit, obviously $10. I front run at $10 and that's it. And if that holds, you might actually be able to create a dump here.
Can you walk through that logic flow one more time so I can just try to understand?
Absolutely not. I'm just kidding. So like I'm looking for, this is my master target here. Like this is what I'm looking at. You have a daily, this can turn into a 4. That will deep dive it to something like this, which is a 4-hour break level. So I would look for this 4-hour break level to be my target and for this to reject and that to become a reverse in the future. So this is like my perfect trade right here. I'm looking at this 4-hour level, holding off this here. And there's, I don't think there's enough. Dude, there we go. I don't think it's, 28% is not enough. You don't go for this. You go for the 4-hour there. Before we hit that, the other 4-hour level we can make logic flow wise is this right here. We can create a trend, which will also be a 4-hour level. Like we need to hit a 4-hour level because we hit a daily. Right now, 4-hour levels clearly aren't holding it. So that whole trade that we engineered on the bottom here was with the assumption that there's a 4-hour level hit here. This 4-hour level can hold it here. It didn't happen. So that's why we engineered that 5-minute trade and tried to work down from there. Didn't happen. Fine. We got out with a very small scathe. No big deal. Now I'm looking to see daily, 4-hour, hourly, or trend. So 2 scenarios to create a 4-hour level. Trend gets created off of the rejection of an intermediate target, or you go up here and then that gets hit. And then that's pretty damning because you have like a very, very flat line trend. Now you've got an hourly here, which could hold down your target. So this is the first thing I marked here, which I also have marked here just to see what had happened. This has already hit. So you can see that this, it is already hit in here. But again, you could simply use this as a reverse target in the future. It's not out of the realm of possibilities right now. So like you could just move that there. With that, we're now looking to create that trend right here. And this trend for you to have a range trend in this trade somewhere so that when this breaks, you know you're going up after this stuff up here. Because then what's going to happen is you're going to create an interior range trend. You're going to have, where is that reach point go here or whatever. So either your interior range trend is going to break or this is going to break. You're going to have something here depending on, you know, how long it takes for this thing to get out. Like it's just really going to depend, right? So you're really looking to create a 4-hour target. So what we do is we start engineering down. So we've got an hourly here, right? We've got another hourly rate here. So this is a nice target because it's polarity. So these will all create, this will create polarity, this will create polarity. And you have to kind of see like which one is this stopping at, because polarity will be created somewhere. So you don't want to have, you know, you hit this and then you pull back and then you go up here and you start holding this. And then obviously you're just like breaking up, right? So like you need to understand that these will create polarity. If they create polarity, this hasn't been tested yet. So it could be the break level for the move. And the break level is going to target something in this region here, so that it can go back below this and then possibly use it as a trigger in the future, or it might not even ever hit this, but it's polarity in either way. So like you hit this, you pull back. Now, whether you get over top of it and hold it and break up, or whether you stay below it and break down, you're really looking, again, this all moves back to creating the 4-hour move up here. So this is how we engineer timeframes and moves like this, right? Like you're really looking for that. So then what I want to do is I can say, okay, well, what's the target above this? Because we don't have any hourly polarity. Like there's no hourly moves that can turn into a 4. So we don't have any 4-hour levels that can be created here. We don't have any 2 candle valleys on hourly levels. We only have it on a 15, which creates the hourly, which can also create the trail for the 4. So the 4 pinning to whatever it hits, right? Accumulation to accumulation, that gives us a 4-hour level. This gives us our 1-hour level, or this possibly is as the reverse 1 hour, because you've got that as well. But this is already hit down here. So like I'm not using that. I want to see polarity. So then I go back into this region here to see where a range trend can be built off of this right here. So then what I'm doing is I'm now starting to look at like where can some of these accumulation candles exist. So what I want to do is I take my replayer tool, where's some hold levels that can exist, and where are those accumulation candles to create the range trend. So you have it right here. You have this right here was your range trend, and you have a 3-minute level here that's above this 15, right? Because you don't want to go too crazy. You don't want to start diving up like 60, 70%. Like we're talking about 25%. And this is about what I would expect to go over top of an origin, creating it for the first time, 20 or 25%. So you could even go like front run this hourly if you wanted to, but I think I like this 67.9 front run it to like 67.888 or something like that. Like just a few dollars below it, because again, you don't necessarily need to hit it. But what you do need to do is get above this, hit something, pull back. And then this, I like it as a target because it can create the range trend. So you've got the hold level, the range trend, which can also create the 4-hour, which also gives you your hourly rate here. So you're hitting and completing all time frames to do like a full circle logic flow to create a scenario that you have the daily, the 4, the reverse 15. I shouldn't call it a reverse 15. Actually, I should call it a 15-minute break that turns into almost like, I guess, the same theories as reverse. That turns into your hourly level. So you've got a 4, you've got an hourly, you've got a range trend. It completes everything that we need in order to support this move down. So that's where you want to start engineering timeframes to say, like, this is, oh, look at this little dumperoo here, continuously holding this move. I'm still not in for this. Like I took my trade here. I engineered it down to what would break the move. It didn't hold. Now, next, I'm looking for the bigger thing. So that's where I'm looking at. This becomes a good trade, and so does this hourly, this 4. I think I would like to see a little bit more what happens, but it's within this realm of two levels here. It's within those two. They can both create a 4-hour. And really, like in order to dump this move, that's the first thing you have to do. You've hit your daily, right? If you...
Wouldn't that 4-hour create daily?
Yeah, right here. This is a daily here. So this right here, if you hit it again, then you need to start looking for dailies. So like if you hit this, it's going to be a completely different scenario, right? But then you've already hit this and you want to hit a 4-hour next. So it can either be this or it can be this. This is actually a daily. So I wouldn't even use this. I wouldn't even use this. I would use the hourly here. If we go hit this, I would never take a trade here. I would take a short here and use that as my trigger. So like I would take my short here. And if we do not get below this, like if you just start holding around here and around here, like this, if you're in this scenario, the second you go above this, out of the trade, like, or at least have some kind of like shield, right? But, or like if you start holding like this after shorting here, out of the trade. This has to weekly, daily, or, right? So you like, if you are going to dump here, it has to follow this criteria. It does not have a choice. Oh, look at this. We would have been in profits. Just kidding. I would not have stayed in that trade. Here. No, you would have been out of the trade already. Well, if it's 68%, you like maybe, but that really is not worth it to be face to face with 18% right now.
I'll go one more question whenever you get a chance.
Shoot.
Why did you choose that 3-minute level at 67,900 and not the 5-minute level?
You're talking about this here?
Yep.
Yeah, like I saw it, but look at the difference in measurement. Like, are you going to miss a trade over
Okay.
6%?
I thought it might be a logic flow
Yeah,
reason
just
or
RA.
rate.
And then
Yeah, okay.
also, yeah, no, it's not a logical thing, but the difference here is, does your range trend start here or does it start here? So if you test this, it's starting here. If you test this, it's starting here.
Yep.
I would rather cover both of these moves within 6%. And then even if it does go to that 5-minute level, like even if it does, yeah, like if it goes here instead, then you're still in the trade. And the only difference you would do is you're just like, oh, now we do it from here instead. Like there's no back end difference. You're just making sure you're making that adjustment. Yeah, because there's no real like intrinsic back end difference there. It's just like 6%. You get you get it on both trades. Either you're going to hold it or not. It's not like the 6% is going to make any difference. And like that's something I really have been trying to communicate and still will continue to communicate over the last like couple months. Is that like, you know, RA is such an important thing, not for the simple fact that it saves us money, but it allows us to make smarter choices. Because like if those levels don't hold, the 6% is not going to save your bank account. Like it's not going to be like, oh, I didn't get liquidated because I got an extra 6% in the beginning. Like this is a good mentality to have when we're in the learning curve of level 1 through 5. Like beginner's course, future of trading, blueprints, maybe even butterfly effect 1. Going for greediest hold levels because you just don't have this level of knowledge. But there's a point to these trades where like we target polarity for a reason. We target the things that are like must create scenarios. So that 6% is it's not preventing liquidation. It's not giving us any extra profits. Like if our profit take on this was 300%, do you care if you make 300% or 306? Even if it only triggers 1 in 5 times, you're only making an extra, what is 6 times 5? You're only making an extra 30%. But the one time you missed it, you're losing 300. So it's like 10 to 1 odds against you. And because we fight liquidation rates so hard in trading, like you have to be mindful of these things. Like it's 6% is not worth missing a trade. That if those levels don't hold, you're going to get pushed out of the trade in either spot. It's not like the only difference is, did you 20% of the time you may miss that trade, or actually I think it would be much higher than I think of 30 or 40% of the time. Even if it was 10% of the time, you might miss that trade. It's not worth it. Not when the pullback is so big. It's not like you're scalping for. To make that worth it, you'd almost have to have 0 fees and be playing for 10% scalps. So be playing just a scalp game of 10%, 10%, 10%. So let's imagine there was an exchange that had literal 0% fees, maker taker, no exit. Like Chart Raiders is out. We have no fees on Chart Raiders and no percentage difference. Sure. Then you can measure it and say like, okay, well, the 6% difference, if I'm taking 10%, you're less than 2 to 1. You're 0.8 to 1. On the R to R. So you're only actually edged out 20%. Sure, fine. Then that's one scenario, but that's not reality. No, well, not yet anyways, not till Chart Raiders is out. And then it's a reality. But yeah, just to not miss that trade. Nothing to do with logic flow. I saw it and I saw how close it was. I didn't even bother entertaining it. I was just like, not even worth it. So yeah. And then like this is a good high level way to manage those expectations as well, because this right here can create a break, and that can be the bigger part of the move. Like really right now we need to create a 4-hour level. So all this backbone's off the ability to create a 4-hour level. And because we have hit a daily and because we do have the 4 here, it is a pretty nice and convenient setup to have the break of the move down. You don't have a daily candle here. Like this is not a daily candle. This was a daily test, and you don't have a daily trend that can be made. You only have a 4-hour trend, and you only have 4-hour levels. You either start creating 4-hour levels and dumping like this, maybe this right here, and maybe this does end up dumping the move and holding it. Who knows? I guess we'll see in the next couple hours. But you know, you also can just create a trend as a 4-hour level, and you could just like, it's not the greediest level yet. Like this isn't the greediest 4-hour level, believe it or not. This isn't even the greediest 4-hour level, believe it or not. It's already hit. This hourly is the greediest 4-hour level right here. And beyond that, before you can get to that, you have one chance to create a 4-hour level, which is this trend, and that's it. And there's nothing else. So you have daily or you have trend. And where can you create trend is what you have to start thinking. And then if trend misses, you're just simply going after the hourly here, the hourly break. So you have two trades to engineer here. You have the 4-hour trend and you have the 4-hour level above, because that just +1 -1's the collapse from this hit here. And because you broke such a crazy range, you've full on targeted some pretty critical levels here. Like you've targeted a weekly level right here, or you've targeted a daily. I should say you've targeted a daily. You deep dove it to hit the 4-hour level. There's a 4-hour level here. You've got a range trend. So you've already created a scenario where this can hold you up on the bottom. So like you must mark this, because if this holds the move, then you're just not staying in the trade, because this is your weekly level once it hits again. So and you just need one more day to pass, and then if it hits it again, you've hit a weekly level. So that's important. You've also hit daily with this as well. No, you haven't. It's this one here. You've hit the daily with. You've hit a daily right here, right? So you've also hit this daily here. You haven't hit any backsides, which is nice. And then you've got your 1 hour here, which is a 4. So you created all your timeframes on the bottom. Like, this is what I was looking at yesterday. You've created all the timeframes on the bottom to show you what you need to know. So like, depending on which target gets hit now, you know exactly what's going to happen. You got stuff in here. So you got the 4 hour right here. And then you got backside right here. So you've got all your information here. I like the collapse of this move personally, because you didn't stop on the backside. If you ripped this backside, I would be a little more inclined to, or even if you stayed above it and hit this, but you went through the level, you went through the backside. So you had 2 tests here. You had the front side, you had the backside, and then you deep dove the front side. So now you're looking at collapsing the move. So this is part of the reason why I'm also liking a move down here, because of in which way you targeted this 4 hour level, right?
Okay.
So in the way that you've targeted this,
4
because
1 hour.
But 1 hour level, because you've targeted not only the front side, the back side, and the front side again, you've got your level here, right? Like, you've got your 1 hour level targeted daily for weekly, daily for 1. So you can target every time frame down. So now you've got the trail below. So that's a Pandora's box to what we have up here as well, right? Daily, you need a 4, you need this, you need that, you need the same. So like, it's a Pandora's box what you're seeing right now at a higher level. Pandora's box.
I did not even realize that, dude. That's amazing.
Yeah. So you've got a Pandora's box of time frames. So that's going to tell you which side is breaking, which side these master time frames are being respected. So like, right now, for me, we're in a spot where we need to replicate this on the top. And that's also another reason why I'm looking at these, because in order to properly create a Pandora's box, which will tell us, then we have trend work that needs to be done. So if we have the Pandora's box and the trend work, then we know where the trade is going. So there's kind of an expectation here to like see these levels, kind of the same thing happen here. So, yeah.
And last question for me. If we do collapse this move now, are we going to be targeting a weekly? Because we hear
like
that
if you collapse it right now?
Whenever we collapse in 2 days, 5 days.
So like, are you talking about, when you say collapse, are you talking about getting down to the range, or are you talking about going lower than this?
Going lower than that.
If you go lower than that, I think you're down at 53K. I think you're down like at this polarity that held the level up. Like, this was the whole thing. Like, if you remember back to a couple of weeks ago,
yep.
This was everything. This was protecting the entirety of the upper range. So like, and we said, like, when this breaks, this thing's going to rip, because there's nothing left. It's going to go for the deepest parts of the range. And it really did. Like, it really did beyond even my expectations. I thought it was going to stop here and some combo levels in this, but it went further in the range, which is fine. It's not like, you end up being wrong or anything, because you're also not taking 100x trades here. But what we did know is that this is protecting the final range. If that breaks, then you just rip up. And then we had it pegged as, levels up in here, past this deep dive, hit this, deep dive that, et cetera, go after stuff like this.
Mm-hmm.
But again, fine, you're not taking those trades anyways. But what we do know is that this was polarizing the move like crazy. Like, look at the size of that candle. It's disgusting. It's literally like, it's a ridiculous candle. So you broke this, smashed above, and I think you need to see if you're going to hold this polarity. I think that's really what you need to be paying attention to, is if this can hold, then it's time. Like, it might even be worth it to take a knife catch long on that level. Like, I would maybe do it with like a lower amount of leverage, something that you don't mind losing, because I think if this holds the move, you just break and you rip up. But then outside of that, maybe you start going down into these low 40s, like down into this range here. You can also backstep into this range here. Like, you can also backstep to here. This is another big part of the range, but like, you kind of have to work your way through these ranges. You kind of have to work your way, break below this polarity, see if you break below this polarity, and then if you target the front side, and then you go to this polarity here, and then you target the front side here. And if that doesn't break, then you start looking at breaking the move from here. So then you're, on a break level there. And if that collapses, then you're down to the final hold level. Like, so I don't know if it's going to go that deep, but it's very possible. I mean, but that's how I would start to look at it. And yeah, I think 53 is like a good first stop there. I think that's a good good level to start thinking like, okay, if this can hold, because the backside polarities, if they hold, you're moving up. So but you see how rapid these things happen. Like look at what happened to Bitcoin. Look, it hit a critical level and it dumped right down. Like that's a big clue for us. That's a big clue that we need. We need to start creating that on the top here to break it down. So like I like taking higher up shorts here. I'm not as fearful to take these shorts with the thinking that, oh, this thing's just going to break up. Oh, that was just a little blip in the map. No. That set up the breakdown. So I don't see that as a blip in the map before we run into a new all-time high. Can it happen? Yeah. But for me, I'm taking shorts. I'm now switching into shorts. When we broke this polarity here, this blue line, wherever it was at 53, like this blue thing right here, when we broke that, I'm all longs. I'm just like, yeah, this thing's just going to fucking run right now like crazy. It's just ripping, which it did. Now that you've created this and you've created that, now I'm looking for shorts, and I'm looking to do it with master timeframes that are reflected from down here. You've got the daily, which is already the daily. Next will be the 4.